what I was watching on this one was the fact that the long-term 12-month direction was bullish. So it was very obvious that it's bullish going to the upside, 12 months bullish. Now, when you go to the monthly, you can see that, let me remove this so you can see the price action well. So you can see that the monthly right here was trending to the downside, creating lower highs and lower lows, right? And after that, we saw this impulse move to the upside that broke structure. Now, after breaking this structure, what I did was I used my Fibonacci from this overall high to this overall low to derive my extreme discount zone because I wanted to buy this for the long term. I wanted to buy for a continuation, both investing and trading. Now, this extreme discount zone is already showing me that this is an extreme discount zone, and there's also the last down close candle before an expansion that broke structure. This is also known as the order block. So now I have multiple confluences aligning for price to come down in here. So all I did was to wait patiently whenever price came in here to buy this for the long term, right? Now, I didn't want to buy this and just exit at a 1:2, 1:3. I had to wait for this trade for a very long time. So I'll show you examples on swing trades and then on intraday trades. So this is an example on swing trade opportunity. So when you see a swing trade, you can know how to approach it. So now I'm seeing that my point of interest, which is the extreme discount, has the last down close candle before an expansion that broke structure, also has inefficiencies here. And if we take this to 3-month time frame, it's also had this inefficiency here. So I had multiple confluences that were going to bring price down into that position. And already there was a break of structure here on the lower time frame. There was a break of structure here. I saw a break of structure right here. If you go to daily, you can see on the daily right here, a high, a low, a high, drop down, broke structure. So after this break of structure here, I was now anticipating for that move to the downside into this position. Now, I didn't know whether price was going to mitigate. If we go back to that monthly, now I didn't want to predict and say price was going to mitigate the inefficiency and reverse, or is going to run the liquidity and reverse. Nobody knows. I don't know which one it's going to be, whether it's just going to tap here or run liquidity. The only thing I'm waiting for down here is a 4-hour break of structure. Once I see that 4-hour break of structure, the next thing I'll do is to look for my entries, and then I'll look for my overall take profits and areas where I'll be scaling out profits. Now, we go straight down to 4-hour time frame. Down inside this position, you can see that while price was coming down in here, you can see everything clearly, right?
Yes.
So while price was coming down in here, it was creating lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Even when it came down in here, lower high, lower low. It wasn't breaking any 4-hour structure above. There wasn't any fake breakout. It was consistently respecting every lower high, creating a new lower low until it took that liquidity, and then it created this lower high, lower low, and then we saw this rally. Now, this was a very tricky price action. I had to zoom in to see that there was a break of structure. And right here, you can see that as much as I don't like using here, if I used here as my high that got broken, yeah, it would have been an easy price action for you to say there was a break of structure. But I like to use the wicks and the bodies of the candle. I want to see the bodies of the candle closing very well above the wicks. So that was why I used here to be where the break of structure happened, right there. And then when I zoomed in, I saw that the break of structure, even though it was very small, but there was a break of structure right there. The moment I saw that break of structure, now because I was still skeptical, because I was like, I don't know if this price action is going to keep going lower. So what I did was I used this last down close candle right here, this last move down here. I placed a limit order there because this was also the open of the imbalance. and also the last move towards the downside before the expansion that broke this structure. Now, some pairs like Ethereum, now when you trade a specific pair for a long time, you'll notice some things they do. Now, for Ethereum, when Ethereum breaks a 4-hour structure or daily structure, it likes to come down into an imbalance or the last down close candle, one of these two. Now, most of the time, it doesn't just tap the high and reverse. Most of the time, it likes to come in because it's a very volatile pair. So now I placed the limit order here, and then I was watching this imbalance to see if there will be a 15 minutes or another 4-hour break of structure. So I can say, okay, if it breaks, that means it doesn't want to come down in here, and then I'll buy it from here. I don't know if that makes sense.
Mm-hmm.
So now I left a limit order here. My stop loss was right here, few pips below down here. Left a limit order here. And then eventually, fortunately for me, price dumped in there. You can see that it didn't even give any sort of retracement or break of structure in here inside the imbalance. It just went straight into this position. And the moment it activated this position, I was still waiting for that 15 minutes BOS. And if we take this back, oh no, I just messed this up. 1 second. So now if we take this back to this price action, start new. You can see right here on the 15 minutes time frame. So let me take it to 4-hour and mark that zone so you can see what I want to show you. So right here, this was the last down close candles. I'll make this green or red. And then if we go to 15 minutes, now you can see that price went down into that position, creating lower high, lower low, lower high, lower low. So this is my lower high. And all I wanted to see was the break above that lower high. You can see it broke the lower high here. So
Mm-hmm.
all I did was the moment it broke this lower high, I just placed a buy limit immediately on the high. So it literally just activated me immediately. And my stop loss was few pips below here. Now I've shown you the entries. Now we'll go into the exits and how to scale out of a trade without losing the total volume. Now, this is an example where it's a swing trade opportunity. Now, I'm anticipating for this to hit a new all-time high, but I'm not going to hold the trade to hit a new all-time high because there's no guarantee that it's going to hit a new all-time high. So what I do is I'm looking for the lowest hanging fruit objective that is using this level. This is low resistance. All these are low resistance liquidity. So instead of me trying to predict that price will keep rallying and take this one and hit a new all-time high, it's better for me to take it out from here. Now, while I'm targeting here, this is my overall target for the trade. Because it's an easy level that price can smash into. Remember that we're using 3-month inefficiency, overall extreme discounts, and that area as well. The area we're targeting as well is before the extreme premium because we don't want to hold this trade to hit extreme premium because it can hit extreme premium and reverse on us. Look at what happened at extreme premium here.
Mm-hmm.
It hit the extreme premium and reversed and hit it again and still reversed again the second time, twice. So we don't want to hold any position to hit extreme premium. So now I've derived my overall target. The next thing I'm going to do now is to go into other higher time frames and look for inefficiencies that are resting within this zone and mark all of them out so that each one price hit will be a take profit position where I'll be scaling out some of my profits. So I'll just remove all these green lines so you can see everything clearly. Now, each time frame I'm marking out inefficiency, I'm labeling that inefficiency that I'm marking out. So firstly, this is a weekly inefficiency. Secondly, this is our equilibrium zone. I want to still scale out profits at equilibrium. Then This one, thirdly, there's another weekly inefficiency here. I'll mark that out as well. Now, part of the reason why you have to mark out these key levels is because these key levels can also be an area of reversal, because there's no guarantee that price will hit this level. Price can literally come here, tap it, reverse, and run your stop. Now imagine holding a position and you are up like $6, $7, $8,000 and you hold it, no profit taking, and it reverses and takes your stop loss. So you want to keep taking things out. Now, once you've marked out your areas of interest that price can reverse on you on the weekly, you go to your daily and you're doing the same thing on the daily. Now you're seeing that the daily right here, this one also aligns, this weekly inefficiency aligns with the daily. This weekly inefficiency aligns with the daily, which is now fantastic. Now you can label this. Once price hit this level, you want to take 25% off.